Jeff, good morning. It feels like you're doing all the things that the street is looking for: a buyback, better profitability. We were just having this conversation, though, at the start of the show. How do you balance that with revenue growth and innovation? Your organic growth in Q1 is calling for 13 to 14%, and that is lower than your medium target of 15 to 20.
Yeah, well, thank you for having me on the show. And you're right. There is a decision you make between investing and some of those investments that can result in accelerated growth. I don't think it's purely a matter of, one versus the other, because you have to have the right investments. And so I think during a time like this, where companies are really reconfiguring, taking substantive actions like we've taken to adjust to a new environment that we're in to get profitable more quickly, you really take a harder look at those investments and say which ones are contributing to the revenue growth and to the profitability of the company. And that's the important thing. Regarding Q1, I want to remind you, though, that we have a usage-based revenue model, right? So that's a little bit different than a lot of companies that are subscription-based, right? Because it reflects the underlying usage of our platform by companies who are our customers. And so we see an accelerated headwind during a time like this, which is unfortunate, but it's true. But it means we also have the ability to see an accelerated tailwind when economic recovery returns. And I think when that does, what you'll see is that we're well prepared, we're a more fit company, a more focused company, and a more profitable company to be able to capitalize on a return to economic growth in the macro economy.
Well, Jeff, that's clearly what the street's anticipating, not just the guide on Oppernet. But I guess the question would be, how will you know? You've already done a lot of difficult work in terms of managing costs. How will you know when it's time to lean into the gas a little again?
Well, I think what you'll see is that we are focused on really looking and scrutinizing our investments, making sure that we're making the right investments, that we're getting the right ROI from those investments. And in particular, I point to on the communication side of our business, one of the things we did is we split into two business units. And on the communication side, we're really focused on efficiency. And we feel we can grow that business with the product doing more heavy lifting, with a more product-led growth strategy. And that can grow with less spend going in. And on the flip side, we've got a data and applications business. And this is a smaller business. It's about $400 million today. But we see this as the earliest stages of market penetration. And so we're continuing to invest there quite a bit in order to grow the penetration of Segment, our CDP product, Engage, our marketing automation product, and Flex, our contact center platform.
Jeff, Twilio's dual-class structure is set to sunset this year, and so that could potentially mean less voting power for you as the CEO, potentially less autonomy. Does that change how you run the company, especially in a market environment where activists, investors are strong and they're making moves?
Well, just prior to our IPO, right, we discussed whether a dual-class structure made sense for us. And to me, as a founder, CEO, taking a young company public, it provided a runway for us to get our footing under us as a young public company. And even if there are maybe some missteps along the way, it provided us some degree of ability to execute. But we set a 7-year expiration on that, because over that period of time, I would expect us to mature as a public company. And I think you see that happening. And so I think it provided us a nice runway to get our footing. But now, all along the way, we've been listening to our shareholders. We've been taking their input in what we're doing, as we continue to do. And look, I'm a fiduciary of the company. So even though I have historically had this vote, I am representing all of our shareholders. And I think that you'll see the actions we've taken this week represent, a lot of feedback that our investors have been giving us during this time.